Good evening, everyone. Thank you for joining into our exciting opportunity which we have right now. We're calling it the Strata Industrial Opportunity. So this is a part of a 7 lakh square feet warehouse factory which we're acquiring. This opportunity is about 2,81,000 square feet, which is up for grabs. Our entry yield, because of the top up, is going to be about 10% for the first year. We hope to hit an IRR target of 13%. We have an 8-year lock-in and a 10-year lease, and it's in a great location called Hosur, which is already a major industrial hub at the moment. The tenant is a leading toy manufacturing company, which I would speak about as we move forward in the entire webinar. What is exciting is in the last 6 months to a year, there's a lot of traction which you're seeing from a manufacturing side of things, especially I'm sure you'd have heard with the kind of e-commerce demand which has gone up. So warehousing and manufacturing units have seen a tremendous amount of demand where companies are wanting to look at. More importantly, India is a large consumer economy and we need a lot of stuff. And that is where there is opportunity for us as investors to grab in or grab onto an opportunity, especially with respect to this kind of an industrial boom or warehousing boom, which is going to happen in the years to come. Obviously, a lot of benefits are coming in as well from the government side to promote industrial manufacturing in a large way. I think there are 3-4 states which will benefit the most, Gujarat, Maharashtra, and Tamil Nadu, where proactively, if you're looking at investing in this sector, these are the states where majority investment would come in. In terms of the total investment which will come in India. Key growth drivers, very critical for us to know. I mean, as Strata, at least we are very excited and we keep manufacturing as one of the first preferences from an investment standpoint, then office, then warehouse, then retail, etc. Why it is exciting? Like I mentioned, we are a fast growing consumer economy. I remember in one of the conversations in a webinar where concerns was, this is pre-COVID, that how many of you all do business with China? I think about 80 out of 80 said, yes, we do business from China. But then the question was flipped again, is how many of you all do business with China where you supply stuff to China? There are hardly 1 or 2 people who raised their hand, right? People forgot the fact that China was also a large consumer economy, and there were a lot of people who consume things, and wherein a burgeoning middle class were ready to consume a lot more and pay for it. Likewise, India is also in the same cusp of growth with respect to the kind of consumer economy we are. In fact, there's a whole new trend, especially with the rise of these e-commerce companies, where direct to consumer companies have also come up, which are able to cut costs, give solutions at a cheaper cost because they're able to eliminate the wholesaler, retailer, franchisees in a large way altogether. Demand for e-commerce is growing up day by day. I think we are still in a single-digit penetration from an e-commerce versus the West, which is in almost 25-30% from a penetration standpoint. It's a large way. I think there's a lot of investments which are continuously keep going to happen in this to ensure it becomes a platform where it can reach to the masses through e-commerce platform. An emerging alternative to China, as much as we've been hearing about it, and we foresee it can happen. Trust me, it is happening as we speak. There are multiple companies who have moved or are looking at BCM, business continuity management perspective, and have entered India and are setting up their manufacturing facilities right now as we speak in India as well. So there's a phenomenal thing. I mean, a testament to that is just your Apple itself, which has moved in partnership with Wistron, Foxconn, and with Tata Electronics, and have set up 3 mega factories already in Bangalore for the entire Apple products manufacturing. Obviously, Make in India, your GST are great initiatives which are ensuring it becomes a more unified tax system. But what is exciting is the whole low taxes for manufacturers. I mean, in the last budget, I think there was an announcement that it's got to be 15% for companies incorporated in 2016 till 2021, 22. Their new corporate tax will be 15% if their business is into manufacturing. So that's the kind of incentives government is ready to offer to people who can set up their manufacturing units at the same time. Now, like I mentioned, there are 3 states which would benefit. We are very bullish from a Tamil Nadu standpoint. We're based out of Bangalore. We've seen how Tamil Nadu has grown. It's a phenomenally large industrial hub. It's not just restricted to auto, to textiles, but it's a very, very large economy in itself to the kind of manufacturing units which are currently available in Tamil Nadu and will continuously keep rising at the same time. Recent developments have been very interesting. I'm sure with the new government which has come in, lot of push is going to be especially towards manufacturing side, because this has been one sector which Tamil Nadu has always been forefront in. Tamil Nadu did lost a race with respect to IT in a big way because of whatever political instability, but I think that also would be one factor which is going to be a big rise, especially with the new government. The government, with the new initiative called as Guidance Tamil Nadu, has been giving single window clearances to companies. Ola is a classic example, from land identification granted by the government at a very, very low cost to approvals, etc., in 7 days. Now, this has never been done before by any government in India, and Tamil Nadu has been doing that very proactively. I mean, people who are looking at setting up or are aware, please do check out Guidance Tamil Nadu and see the single window clearance, how they've been doing it. Lots of factories have signed up and are invested already and are developing their factories. Strata, like for that matter, very close to the facility where we are buying this current facility, is close to about a 50 to 80 lakh square feet iPhone, iPad manufacturing unit. Ather has its factory close by, and multiple other companies who are looking at setting up factories in the same vicinity itself. For people who are not aware of where Hosur is, so Hosur is very close to Bangalore. It is the first town which comes the minute you cross Bangalore, Arnikal rather for that matter, and you hit Hosur. Hosur houses TVS's only factory for the two-wheeler, three-wheeler, or rather the largest factory which they have, Ashok Leyland's factory, Titan's factory, and multiple other factories, which are one of the largest SIPCOTs as well in this region, is in Hosur Krishnagiri belt at the same time. So skilled laborers. At the same time, they can take the advantage of the whole Bangalore ecosystem, which is available, but still be in Tamil Nadu and enjoy the benefits which this government is providing. Just the recent news, I think people who've been tracking Hosur, we've done 3 investments already in Hosur. This is our 4th. People who are aware, when we had invested in May, we were one of the first few guys who have invested in Hosur. But today, there are phenomenal other parks also were coming, including TVS's industrial park at the same time. So this is becoming a growth sector. And for our existing investors, it has become a cushioned investment, because that risk which we took in terms of investing, in spite of us having a longer lock-in with the tenant, but it's the entire area which is developing very, very fast to what we had anticipated also at the same time. So Ola's factory, Tata's factory, TVS's new EV electric plant, Ather's factory, which is Hero Motocorp backed company, etc., all have their facilities within 5 to 10 kilometer radius from the project where we are investing as we speak. So yeah, just about 40 kilometers from the center of Bangalore is where you reach Hosur and the entire market itself. So tenants in the vicinity, like I was mentioning, because it is close to Bangalore, so a lot of these Bangalore projects such as this, where Amazon, Nike, Puma, etc., have their warehousing facilities. But Hosur, on the other side, has Flipkart, Caterpillar, Del Monte, Ather, and all the other factories also who are there as we speak right now. So the asset overview, it is a 120-acre park which is getting developed. Phase 1 is completed and more or less handed over. We own 3 of them, or we manage 3 of them rather. The one B3 just got handed over to Stellar, which has leased it and is managing the facilities for Flipkart and Duraflex. B2 and B4 has been given to Wakefit, and B1 is Whirlpool, which we don't own, but Whirlpool is the tenant in this thing. So the phase 1 is completely leased, and more companies are coming up and signing LOIs, which we would proactively keep building in, subject to our negotiations with the developer. Just the side images of the current park so that people are aware. We share such regular updates to our clients on a regular basis, so that they can track. And as a part of our asset management, which we work, they can track what work is happening. Weekly, we are trying to send this, sometimes fortnightly if we're not able to go, but we share so that investors can track how things are working out. If there's a delay, they're well aware of the delay as well. But the entire facility, etc., is showcased to our investors on a week-on-week basis. So they can also see real-time how the development is going on, whether it's the infra work or the entire development itself, completely trackable on their dashboard proactively as well. Great. So the asset overview, like I said, this is a part of the 7 lakh square feet box. We're buying 281,000 as phase 1, pre-engineered with a good mezzanine floor, perfect for a processing unit or a large fulfillment center by any of these e-commerce companies. That's the kind of specs which this facility has, and which is what we are investing in. Just the rendering images of the box, how this would look like with few of the garden areas which would be provided. This is the facility which is how it is going to look like once it is completed. So expected completion date is about January from the developer, and February is when the tenant moves in. Now, what apart from the company doing well, the kind of investors they have, etc., what excited us more is the whole toy industry in itself, which we are very, very bullish about, especially because India wants to reduce the $600 million import which we do every year from China only with respect to toy to start manufacturing. There's a production linked incentive scheme for such companies to start looking at manufacturing here. Hence, they're setting up a new facility. Lots of other benefits have been done, including they've increased the duties for imported toys, which means it's going to get expensive. So a lot of local push is going to happen when the Prime Minister did mention that we want to focus and making this to be a toy economy, right? So this is great for us. Again, very important, because as a company, we just don't invest into the property. We look at the tenant, the sector which is into, how's the sector looking at for the next 5-10 years, because that shows the stability of the client and obviously for our rents as well. So the terms and financials are clear. I mean, we have an 8-year lock-in and a 10-year lease into the asset with an escalation of 5% year on year. Insurance and property tax will be borne. We have a 10-month security deposit as well. Rents ideally would start by November, because we are giving a top up. Rents would ideally start from September itself. So by the time we look at acquiring, it's going to be August, and September onwards, August end, September. So effectively, right from the day you invest, you start getting your rents. Like I said, we're giving the rental top up to ensure you get paid from day one. There's a 5% escalation, so we're going to make an average of 11%, on par with the highest we've ever done on our platform till date, is what this opportunity is as well. The entire breakup of the opportunity, the purchase price, legal fees, etc. Financial model, for people who are not aware, we share a simple financial model where one can play around and get an understanding that in case you're looking at investing 50 lakhs, you'll automatically get what is the rents you would generate, what is the management fee, what is the property tax, and what is the net rent you would be generating out of the opportunity as well. So month on month, year on year, we distribute our rents month on month, like how we've done for all our assets. Otherwise, this is the entire thing which you can play around, get an entire idea of what is the net capital gains tax which would be factored in. People to understand, if we are growing at a 5%, you can take indexation benefit and there won't be any capital gains tax on your investment upon exit. But otherwise, whatever rents you get, we'll deduct TDS. Unless you give us your 15G hedge, we will deduct TDS and remit the money to your bank account every month. So we've made in growth sensitivities at 3, 5, 7, 10, 12%. So you can fairly take an estimation that, okay, even at 3, I make an average of close to 12% year on year from a rental return. So very, very good, very strong, robust product, client investment opportunity in itself. Why it is even more comforting is the fact that now that we would be owning 1.5 million square feet already in this park, and the kind of park which is getting developed, good possibility for us to look at institutionally selling it, in the near future, because we'll be controlling the entire park. Like I said, we are targeting a 5% annual appreciation as a part of an IRR. However, even if you conservatively look at 3%, we'll still hit close to 12% year on year from a targeted IRR standpoint. So the entire investment thesis is simple from a business standpoint. It's a fast growing hub. Clearly, from the time we invested, just the fact that so much got leased out itself shows that there is so much traction in Hosur right now. Entry yield is great. So is the IRR, which we can prospectively make out of this investment. Tenant is fantastic. Strong financial, strong fundamental business. Also, at the same time, we have a very, very long lock-in and a lease. Again, something which we always look at when we look at investing in manufacturing and warehousing sector at the same time. So the terms are clear. We are running our pre-booking till August 15th for you to get the 2 months of rent. For those who don't avail, your rents would ideally start from November 2021. A management fee remains 1%, and performance fee is 20% if you made a CAGR of 8% year on year. Just quickly about us. one thing which people have asked, especially during the pandemic, how has CRE performed over the last years? But however, if you see a big trend, CRE has been the top two most consistent high yielding asset class for investors over the years, which is rent plus appreciation. On an average, close to 15 to 18% is what investors have made over the years. Yes, last year was stressed, obviously, because of the pandemic. But otherwise, things are back in a big way. Most of the office occupiers are coming back to office gradually. Think Infosys and Thesis have already announced, and multiple other companies are also wanting their employees back into their premises. So that is something which is there, which is why we're very confident that offices are here for a long tenure. They're not going to be deterred by COVID. But however, there is an advantage for us because we have long lock-ins and leases, which ensures that our stability is going to be of paramount importance. So what we do, we bring such opportunities to you on our platform, allow you to invest into assets to whatever minimum ticket size you want to invest in. We manage the entire asset on your behalf and help you liquidate the investment in future at the same time. So we manage today about 320 crores in AUM, including our managed asset portfolio. Close to about 1 million square feet is what is under our management. 0.8 million is just the warehousing facilities as such. Apart from that, our offices, the kind of tenants we have, the gentry of tenants, again, grade A clients who are doing, which means the kind of assets we are able to attract and are able to buy are of those standards which matches the standards of these clients. We have 750 such investors today who have invested in all our opportunities with a good blend of senior management, NRIs, professionals, family offices, etc. at the same time. This is the leadership. So I run Strata along with Priyanka. Priyanka is my co-founder and was one of the first employees of WeWork in India. Nihar is a head of investments, been with Piramal for several years before joining us and drives the entire business. Likewise, Praveen is a head of acquisition and entire management, people with at least 10 to 15 years of experience in the respective domain, what they do. Our recent investments. So our last opportunity was in April. We didn't do any asset in May, June because of the pandemic. We wanted to be more sensitive about what was happening around. So we did a 64 crore asset. We funded that in about 21 days. We did another opportunity in Bombay called E-Zone, which we funded that in a day. That was one of the fastest we've ever closed any asset. We did the financial district, which was leased to UBS, the Swiss bank, which we funded that in 4 days, a 46 crore investment. So what all we manage for our investors, on a normal day, we would love to do property tours, but we are still avoiding property tours for investors. We take care of your lease management, tenancy management, asset upkeep. We obtain and give you half-yearly valuation reports. We're doing that for 2 of our assets. Again, thanks to pandemic, because of pandemic, we were not able to go and take those asset management valuation reports. But now that things have opened, the team has gone and we'll be circulating that in the coming week to all our investors. You have a dashboard where you can track all your investment returns and multiple other things through the platform itself very proactively. The structure is simple and something which we follow throughout. Investors invest into an escrow account. Once you sign up on our platform, there's a common master escrow account where the money goes in. Once the property is funded, we move the money to an asset holding company or a special purpose vehicle, as you call it. We issue two types of securities to you: equity shares and CCDs, compulsory convertible debentures. So whatever the rents which we get, we pass it on to you in the form of interest, and it is distributed to you on a month-on-month. The SPV will go and acquire the asset. So the ownership, the sale deed, the UDS, etc., will all be in the name of the SPV itself. So we're trying to make it very institutional, which allows us to look at a larger picture and continue growing as well. Just a glimpses of our dashboard. Maybe I can just take a minute and show you our dashboard as well. This is the dashboard. You can open as many family accounts you want to on the platform. Very simple. You can go to linked accounts and you can keep adding as many family accounts. We understand you might want to map all your investments through one login ID itself. And hence we've made this kind of a system where you can do it. The minute you do a KYC, there would be a virtual account which would get created for you. Again, very simple. Once you do your KYC, this virtual account would give you the flexibility to transfer money for all our assets instead of creating new bank account again and again. So that is what this whole idea of virtual accounts. It's not a bank account per se, but it's more an account number which is unique only to you. So if you invest into, say, Strata's account, it would be Strata's investment. If you invest from Priyanka, it would be Priyanka's investment. And that's how we are able to reconcile at the same time. Again, you can track all your investments, whether it's your buy, sell, rent transaction, portfolio to portfolio, property to property. You can select the accounts which you want to track, and including the rent receipts, etc., are there on the dashboard of the investors, where they can proactively see how much they've got, how much is the TDS, etc., also at the same time. Again, all your rent reports are available, TDS certificates, TDS reports. We're trying to improvise the system even more better, so that there's a seamless experience for you. We're working on it very proactively. All your property documents, share certificates of your investment, the SPV documents, what is the name of the SPV, the AOA, MOA, GST certificate, PAN, etc. Anything which you may require from an income tax standpoint for filing your returns, everything is available on the dashboard as well. Great. So we wanted to make a big announcement. I think we had sent out an email to you as well. We successfully closed a good Series A of $6 million from very, very prominent investors. We had a participation from Elevation in Mayfield. We have 2 new investors, apart from an angel who has invested. Kotak Investment Advisors is one of our investors now, who has participated and has bought an equity in our company, along with Gruhas, which is Nikhil Kamath and Abhijit Pai's new prop tech fund, which they have created, and a special situations fund. So we bank with HDFC Bank today. Custodians are also HDFC, but we're moving to Universal Trustee. We will be announcing that, and we'll send information to all our existing investors. Escrow partner is ICICI, and all what you see from rent collection, rent distribution, virtual accounts, etc., all powered by Razorpay at the moment. So as a part of the entire fundraise, we would like to thank all our early investors who invested and took the path which was not common for everyone. We really appreciate from entire team of Strata that thanking you for the kind of commitment you have shown and the trust you have shown in us. And we would love to ensure we continue keep building and continue keep bringing the best of opportunities and manage the assets very proactively for you. So again, thank you so much for all the trust you showed in us to where we are today. Great. So just about us, in case you want to read up, it's all on media. You feel free to read up. Apart from that, we would circulate this to you, a Google Drive folder. You're free to review all the legal docs, the SPV, which is going to own their documents. Even the deck, which is there, is again downloadable. You can review it. This is a shorter version. This is the longer version. For this Excel sheet, you'll have to download and do it. You can't edit it directly, or you can just view it through the Google Drive, but feel free to download, and you can get the entire numbers in itself.